This conference will now be recorded.
Ms. Williams, you forgot to tell me that I wasn't recording.
I didn't think what you were saying was something that needed to be recorded.
Well, you'll be amazed once the emails come and feedback. But no, if I'm not recording, just, anybody in the class, just kind of remind me on that. Now, how are things on campus?
Good so far.
Okay, that sounds good. Okay, steps 1 and 2, we analyze transactions and made journal entries. Then in steps 3 and 4, we post it to the ledger and prepare the trial balance. We're skipping steps 5 and 6 because sometimes they cause problems as opposed to 7 and 8. And so we'll come back to 5 and 6 in due course. In step 7, I showed you how to prepare financial statements from that trial balance, and you see that is really just a procedure process of lifting your amounts from the trial balance and then going to the financial statements. So as long as your trial balance is balanced and you follow through preparing an income statement first, then your statement of retained earnings, then your balance sheet, you should be able to prepare financial statements. Are there any questions on financial statement preparation by anyone at this point? Then finally, we said that we closed the accounts because we have temporary accounts below retained earnings that we merge into retained earnings at the end of the period so we can start anew. So those accounts run for a year. They're retained earnings accounts. We could put those items in retained earnings, but preparing the financial statements will be difficult. So we put them in temporary accounts. Then at the end of the year, we close all of those accounts out and come up with a updated retained earnings. Okay. So once again, your transaction types, you always want to have those close by. And on your chart of accounts, I told you that note these normal balances. And when you do a trial balance, you should have the balances that are normally there. And let's see, where else do we need to go? It shows you what a trial balance should look like in order, debits and credits. So the trial balance is simply telling you that your debits and credits are equal. Now, if you've got incorrect journal entries, you can still balance, but you can have issues. And you especially want to make sure that you're in normal balances. So if you got a credit balance and account receivable, then that's typically an issue or problem. If you got a credit in expenses, that's typically a problem. This is what an income statement looks like. Now you're just pulling things in, but eventually, you'll be expected to adjust the Excel templates that you have as we get into income tax expense and things like that. You'd be expected to adjust the sheet to reflect the income taxes. So those are templates to be adjusted. Statement of retained earnings, very simple. Retained earnings plus the net income. I want you to adjust it so you got a subtotal in here in the future, less dividends to give you ending retained earnings. So I've told you two things to do. I've told you that you need to plan to adjust that income statement as a template and to put in a line for the income taxes. And then I've told you to come in and put a subtotal line in as you're doing retained earnings. Now, I had a class a couple of years ago, and I had this one team that always did what I told them to do. And I was amazed that no matter what I said, they did it. And so as I watched them, what they did, and of course, which is in the regular classroom, they had a person who taped everything I said that I told them to do. And then they would go over what I said do and make sure they did it. So evidently they had had some arguments in the team about doing things. So one person said, okay, I'm gonna tape everything. And so we have the record of what he said do, and then we're gonna do it. And so they might squabble a little bit, but they would do it. And they always had everything that I asked them to do, any changes. You also need to make sure you're getting this, you've got access to this book, primer or some other book, because you need to read before I lecture. You can't just wait for me. So you got to read for, then be attentive in the lecture, view the recordings, but you got to spend some time in it yourself, probably in writing. So, make sure that you make that adjustment. The balance sheet, notice this, must always reflect the ending retained earnings. And I'll get some problems turned in, and that ending amount won't be there. But you can see I got up here big and bold. Okay, here's what a balance sheet looks like. Eventually, as we finish up and you get into your study problem for this course, I expect you to put these adjustments in: current assets, then the property, plant, and equipment. I doubt if we have any of the others. For the total assets, the liabilities, you've got to separate those between the current, and here they have long-term debt, total liabilities. So we're always separating between current assets and property, plant, and equipment, current liabilities and long-term debt. Then, of course, you have the stockholders' equity, and notice our components. We have common stock, additional paid-in capital, retained earnings, and treasury stock. Treasury stock is negative because this is a situation where a company buys back some of the stock that is issued. So this is how a balance sheet, should be looking for the A students when they turn in their balance sheets with their study problem. Now, I will group you between A, B, and C students.
Professor Boyd.
Yes.
Okay, so just to be clear, on the balance sheets, on the other side where it says liabilities and shareholders' equity, I'm supposed to include expenses over there too. When I read liabilities, I was just thinking liabilities, not liabilities and expenses.
There are no expenses on the balance sheet.
They say accrued expenses. Does that not an expense?
No. Okay. Trying to look at the best way to let's assume that you see, we're going to come in here and go over here. Let's assume that you paid an expense. Let's say advertising expense. So you made an entry, debiting advertising expense, and let's assume that the advertising expense was $12,000. And let's assume that you paid for this on account, so you didn't pay right away. Credit account payable, tab, 12,000. So let's look what has happened. We have an expense, advertising expense, 12,000. That account is going to be on the income statement. So we would stick it in here somewhere. Let's assume that it is in the selling, general, and administrative expenses. Okay. The liability is here. Okay. So what happened? You received something of value, advertising expense. Okay. People did ads for you. That's an expense. That's what you got. That's what you received of value. You gave the person who did the advertising an account payable, meaning you would pay him later. And so therefore, you owe him $12,000. So that's what you gave up. So they did advertising for you, you created a liability. So two things happen. The advertising expense now is on the income statement. The account payable is here. Eventually, we're going to come around and pay this liability. Okay. And what we're going to credit? Well, we're going to credit when we, what?
Advertising.
Where are marketing majors at? If you did a marketing campaign for somebody on credit and the end of the month came, what would you tell that person if it was due? What would you tell them you want?
Would that be accounts receivable or something?
Well, do I have a marketing major in here? So,
no, unfortunately, I'm an accounting major, so I need to.
silent marketing major did some work for your company and charged you $12,000 that you're supposed to pay at the end of the month. End of the month come, he sends you a bill. What do you think that marketing major wants?
Oh, cash or money. Yeah, cash.
I think he wants his cash. So we incurred an expense. And this is why you saw in some of those entries when you were buying supplies where I'd have you buy some on credit and some for cash. So in this case, you had an expense that you just didn't pay it right away. So the account payable means that You already incurred it, you just hadn't paid for it. If you go to the grocery store and buy some groceries, you walk out of there with groceries. You may have used your credit card. Then eventually at the end of the month, you got to pay for it, but you got the grocery. So a liability is something you owe because an expense was incurred now, or you bought an asset. So the liability is the other side of the transaction where something happened, people did some advertising for you, you're going to pay them later. Then down the road, you pay them and you credit cash. You could have paid cash in the first place and you would have debited advertising expense, credited cash, and no liability would be on the books. But a lot of times, most times, the work is going to be done. It's going to be done on credit, and we pay it later. Does that kind of help?
Right, but for me, I think what's confusing me is because like when you were saying that there's no expenses on the balance sheet, it's like
Nope.
the accrued expenses right here. So is the accrued expenses like
There's
supposed to
something
be a
like
representation
these.
of this?
Okay, y'all see the word expense. They're
Right.
meaning
That's
something
what's
else.
confusing.
They're meaning something else, that it's accrued, but for the expense to be accrued with an adjusting entry, you're going to debit the expense. So you could debit advertising expense, you could credit accrued expenses. The accrued expense is a liability.
Okay. Okay.
Okay, so let's go back up here to the chart of accounts. Maybe if we can get to that chart of accounts. But those are good questions. Okay, in your chart of account, is your revenue, here your expenses. They would have been debited when they were created. Okay, so advertising expense is debited. The credit could have gone to cash, if you paid it right away, or if you didn't pay it right away, you would credit accounts payable, salaries payable, accrued liabilities. You would credit that account. So the liability, it might be called an accrued expense or whatever, but the actual expense part of it that's going on the income statement is over here somewhere. So the expense that was occurred is over here. And so sometimes we'll say accrued salaries. That is, if you get to the end of the year, you may not be paid at that point in time, but the company wants to will recognize the expense because you work. And so they're going to recognize the expense, but they hadn't paid it yet. So these are accrued liabilities, and technically, they should be called accrued liabilities rather than accrued expenses. So that's the bottom line. They should have been called. So I just pull an example out.
So it's basically an expense you ain't paid yet. That still got to be accounted for.
Yes. So I can see how that would throw you off. So thank you all for pointing that out.
You're welcome.
The thing is that, a lot of people use different terminology. And so when you see this is an accrued payable, it's not the expense has already been incurred. So these are really accrued payables, not accrued. So they represent accrued expenses, but they are liabilities. So they're just using that terminology, but expecting you to realize that the accrued expense is no different from account payable. Okay.
Professor, this balance sheet is balanced because I tried to add up the liabilities and shareholder, so it's not coming equal for me
Is
though.
that coming out?
And now it's coming up 476,100. I'm not sure if I'm tripping or it's like.
Okay, so you got 476 and it's got 472. So
Yeah.
you're 4,000 off, okay? right? So this is
Yes.
for everyone. Divide your difference by 2. So whenever you got a difference between debits and credits divided by 2, how much is that? 4,000 divided by 2 is how much?
It's 2,000.
Okay. So now you know I treated 2,000 incorrectly. The treasury stock is a credit account over here. So you added this 2,000 when you should have subtracted it. So when you add the 2,000, you got the 476. So the amount of the error doubles. So when you treat something the wrong way, the amount of the error, it doubles the error. So that's why you get 476.
Okay.
So Zahid, that's a good point, a good error to point out that you made, because that helps us in terms of learning.
So,
But you're looking at, standard, I just took pictures of these and put them in the primer to show you what it looks like. But they're assuming that you know that, okay, parentheses here, just like over here, this depreciation, parentheses, you got to, and here you got a parenthesis also. Those items would be subtracted rather than added.
oh, okay.
Okay.
So
Okay.
parentheses means subtracted.
Yeah. And we will get into this when we get to adjusting interest. But if you see the parentheses, you got to subtract them rather than that. So you're adding everything else on each side. So good. That's a good point also. Let's look at the functions of financial statements. The balance sheet, we start off each year with a balance sheet that tells us where we are. Income statement tells us what happened. The cash flow statement tells us when we get to how we, what was the impact of cash. And then they don't have it in this picture here, but we should have in here what else should we have in here?
The retained earnings account.
Yeah, we should have, and they left it out, but we should have in here. Let's see. We should have in here log statement. So if I put that retained earnings, what would you expect what would your statement be down here in terms of what the statement of retained earnings does?
Isn't that like how much profit you made over that period?
That's the income statement.
Retained earnings.
I'll put it in here if I could, but it's a picture. Won't
Like
let
how
me.
much cash you have left? Like how much?
Oh, that's the cash flow statement.
Is that how much you came
Purpose of
into
that
the
retained
situation
earnings
with?
statement.
How
It
much you
tells
had?
us
And
how much income was what retained in the business. Why? Because it's what? It's going to be net income minus dividends. So it tells you, okay, you had so much net income. How much was retained in the business? So this is a picture I just put in here to, for some emphasis. But you still have to always go beyond that. So this is why I'm always updating and enhancing the prime. You have to do that
So
because things change.
the
So
retained
all
earnings.
all four of the statements should be here. They only had 3. What was the comment?
I was saying, so retained earnings, is that just like income less expenses and dividends?
No,
What? So you don't? Okay. I'm gonna go ahead and finish letting you teach because obviously.
that's okay, because if you got the questions, other people have them too. So let's see. Well, let's go to you all's problem, I guess. So let me just see. Statements. Okay, what have we here? Does this look familiar to anyone?
Hey, okay, all right. So wait a minute before you just put the work on blast. That was a correction that needed to be made because we realized after the fact that we forgot to put the retained earnings on the balance sheet, which is why it's not balanced.
What? Well, you already submitted it though.
Well, it was after you started teaching, we came together like, oh, that's what happened. So, we're not perfect. We're not perfect people. We
And
learn
Professor, you also said we have 1 week to submit our corrections.
it. You didn't have to do that though. You could have talked to us on the side about why that wasn't balanced. You didn't have to just post it out there for the world to see. Dang.
Dang, that was aggressive.
I was I'm gonna pull them all up. Okay. How are we gonna learn if I pull y'all to the side, Kayla? How's everybody else gonna learn?
Through your teaching, right? Ain't that what you was supposed to teaching?
So, and remember, part of this process is we working together. And I don't really, if you've worked on the homework, as you know, it's not about taking things, taking points off per se or look. But if we have an issue, I want everybody to look at it. When you make a mistake and it's pointed out, you're more likely not to make that mistake on an exam. But if it's too quiet, it's not. So it's not about that. But I'm gonna pull them all up. So so don't have to worry about that. So let's go back to you have a trial balance here. Assets at the top, liabilities here. Zahid didn't let you put them all over the place. And dividends and sales and blah, blah, blah. So 455. Dawkins, can I tell her what you emailed me yesterday?
Yes, you can. You can.
So they won't feel so bad. See, they want company. So, okay. So I told you all you had to do was to lift these numbers and put them over here. Can everybody prepare an income statement today? Is there any question on how to do the income statement? Speak now, forever hold your peace.
So, Professor, I know for the homework we didn't have a cost of goods sold, obviously, but in the future, like, will we ever like have to deal with something like that, or is it just like how it is now? Like, there's certain accounts that we just like don't deal
Do you
with.
have your chart of accounts in front of you, Dawkins?
I do.
As
Hold
you're
on.
supposed to. You see that right side? You can
Yeah.
have everything on that right side.
Okay.
Got it? You got the picture now?
Yeah. Okay.
So she wanted to know where that cost of goods sold and how can I create that cost of goods sold, and we didn't have it. Well, you have what you have. So they were all concerned and upset because they didn't have a number to go in here. So we'll get there when we get the inventories. You have your cost of goods sold. But that's good and reflective, and I just hope you all are meeting as teams, and it's going to be reflected in the grades of the class as a whole. So that's my objective. So we pulled in the revenue and the expenses, and we got the net income. So the revenue and the expenses and the net income are on the income statement, and we have net income of $60,000. The statement of retained earnings is telling us how much of this net income stayed in the business. You had net income of 60, you paid out dividends of 10. See, the dividends is not an expense, it's a payment to the owners on their common stock investment. So of this net income of 60, you only retain 50 in the business. Is that clear now in terms of that statement and what it does?
Yes.
Williams?
Yeah, we clear. We are clear.
I mean, so it has a kind of a minor role. It always looks like this, except what are you all going to do when you submit it to me next time? Y'all already forgetting. What did I tell you what you're doing, statement of retained earnings? Dawkins?
I'm sorry, what was the question? You said what do we do? We add the net income and less the dividends, and then we have the
I
adjusted
told you to put me
retained.
subtotal line in here. I tell you to.
Oh yeah, the subtotal. Oh, I thought you was talking about like the formula, like actually how to
No,
do it. My bad.
just checking. Okay.
Wait, where you want a subtotal line at? I don't understand where you want that at.
Eventually, next year, this number would be $50,000. Wait a minute. Take that back. Next year, the beginning balance would be 50,000. And let's assume that you had 80 in net income. So what I want you to do is to insert row, okay? I did insert my row where it's supposed to be. I don't know what it did. So what I expect you to do is to see if it would do it here. Okay, did it that time. So what I expect you to do is to come in here and put subtotal here. Okay, and then what will be here? 130?
The beginning versus the net income from this period.
Yeah, okay. Then let's assume the dividends were 20,000 this year. And so at the end of the next year, it would be 110. So
So
all I'm
the
saying is
okay.
just go ahead and put a subtotal in here because it can help you sometime you have losses. Okay, so once we do that, then we then move to what? We move up here and get the assets and just bring them down. Now, this is just so you know how to do it, but I showed you how eventually you will separate the current assets, cash receivables and inventory from the land, which would be long-term. So you would separate those eventually. And the same thing with the liability. So you drop those down, common stock, and you all submitted to me an unbalanced balance sheet.
Okay, so I can explain that because this one's on me because somebody in my group did tell me that whether or not it was discussed or not, we wasn't in agreement until just now after I saw the error in my ways. But I didn't realize that the statement of retained earnings was supposed to come down until like it all connected for me like 10 minutes ago. So you have to forgive me on that aspect because I was a bit stern and stubborn about how I felt like I didn't realize it was unbalanced until just now. So yeah, that's
So
all.
Technically,
I'm one of
Professor,
those
it's
people.
balanced.
I'm one of
It's
those people who didn't stand up to you and let you make them wrong. You
so,
must be a
Professor,
Republican.
technically it's
You
balanced.
must be a
We
Republican.
just,
They'll
yeah, we
change
just
the election and change who can vote.
we just missed one retained earning addition in there. Otherwise, it's balanced.
So once again, did y'all look at the video?
No, I'm a
Uh,
textbook reader. I'm not a video watcher.
okay. And then you
Wait,
had the
where did
investment.
80,000 come from? I know where the 130 came from, but where did the 80,000 and the 20,000 come from for the
That's the next year.
the next year? Wait,
Okay, you had an income of 80 here. So I'm just jumping
oh,
ahead.
so you just like made up those numbers like
Yeah, I just
off
made them
of some.
up.
Oh, okay,
I
I
just
was
made
about
them
to say
up.
because I don't know their questions, so I didn't know like exactly if they had like an additional thing because I thought I was missing something. But okay,
Okay. So this is the first year, but after the first year, it's going to look like this, okay? First year
okay,
beginning balance is zero. But after,
right.
it's just like your bank account. When you first open it up to zero, then once you put money in it, it continues to change and move and everything. Okay. So I won't charge you all too much for putting retained earnings in here.
It was implied.
Oh goodness. That's some... Retained earnings. So the retained earnings would be how much? 50,000. So this would be 90,000. Uh-oh, here's another mistake. Why didn't this change automatically?
Because I didn't have the Excel spreadsheet set up to change automatically. I'm an old school calculator type of person. My fault.
Okay, as we work with longer problems, you want to make sure you're using this to add and subtract. And you can, get your account set up and then you can put a formula in to say, okay, cash equals what's on the trial balance. Okay, and you can do that for each one of these accounts. And so as you prepare in the trial balance, these items are prepared automatically. So it's 10 of you all. Hopefully you all can work that way, because that enhances what you're doing and it makes it easier. So there are things you can do. Got it? You can even have these T account balances come over to the trial balance. Okay. So we're not trying to, we do it manually initially a little bit, but you can see as I did those statements. Okay, let's go into these closing entries. So what I expect to see on closing entries. How many closing entries?
4.
4 closing entries. In the first closing entry, they debited sales revenue and credited income summary. So I'm assuming that if I go back here, I'll see 130 in this account. Okay. Then in the next one, I'm expect to see those 70,000 in expenses closed out. So we debit income summary, credit expenses. And what's in this third closing entry, Dawkins?
The net income or
So the net income is always
and the
in the third closing entry. That net income is always in the third closing entry. Uh-oh. Net income, 60,000.
That's not what the book said, because I had the book
That's not
open.
what the book said.
That's not. I promise you. I had the book open right next to this Excel sheet, and the book did not say that. It said, I know that book said retained earnings. I got the book on Cengage.
All right, let's see if we can work with this. Oh, y'all making me work hard today. I didn't even want to talk and save my voice. This is going to cost you all. Okay, then let's put income summary here. Now, these T accounts will go back, I'm just putting them here so we can look at them. But they will be with those regular T accounts, okay? And then we have dividends here. Sales here. And we would have salaries. Type of emerging plumbing. Salaries, so having here with the advertising. I'll come over here and I'll put the interest. So I guess there's a way to merge those cells, but we won't worry about that now. Now, beginning retained earnings was what?
It was 0.
Maybe 0?
Yeah.
Okay. So let's put the first closing entry in where I guess we got to put these amounts in. Sales had 130,000. And dividends had 10,000. Sales salaries had 40,000. Advertising had 20,000. And interest had 10,000. Okay. So in our first closing entry, once we make this entry, then we have to post it. So we're going to debit sales for 130. And we're going to credit income summary for 130. And so as you can see, I guess there is a way to strike in Excel, but maybe not in Word, which we can see they balance out. Now we're going to have to post the second closing entry. So we're going to debit income summary for 70,000. And now we're going to credit all these other items, 40,000. So we're posting now. Whenever you make a journal entry, you post it. Okay, so where do we stand? So now we at journal entry 3. And in journal entry 3, we got to do two things. We got to zero out this income summary and transfer to retained earnings. So let's assume we use the 50,000. So if we debited this account for 50,000 and we credited retained earnings for 50,000, have we closed this account out?
No.
Okay. And then when we post in the dividends, our balance in the account would be what?
40,000 instead of 50.
40,000.
Okay, so because I'm really bothered by the fact that I got something like this that simple wrong, I went back to the textbook like right now to see if I read that wrong, and I didn't. On page 52 in the textbook, it says income summary or retained earnings, which is why I did it that way. Maybe it's a textbook error and not me, but I just followed exactly what the textbook said at the moment.
Okay, well, that's fine. What page? What page?
I have the e-textbook, so it's 52 on the e-textbook.
Same page. What paragraph?
It's summary of closing entries. It's just a table.
On the table. So you got the table?
Yeah.
You're on the table. So if you look at that table, and I'm gonna go to it in just a second, it's telling you you debit income summary and credit retained earnings if you have a net income, you debit retained earnings and credit income summary if you have a net loss. Okay, but it does not change the fact that it should be the net income. We'll look at that. Okay, so
Professor, I was gonna say, like, for that area, because like for your income summary T account, when you look at the closing entries, like it's not balanced either. So it's like on the left hand side it's 120, and then on the right hand side it's like 130.
right, so you
So
know that you got an issue if it doesn't balance.
yeah.
Then you won't have the right amount in retained earnings. And so, because you see what we want and what can happen, and this is really good because a lot of people put the balance that retained earnings is supposed to be in that closing entry as opposed to the 60,000 the income. So that's why I said it 3 times yesterday, because there's a tendency to want to have as closing entry 3 the ending retained earnings when it's supposed to be the net income. So just kind of a natural thing that a lot of time people will come in and put the ending retained earnings in journal entry 3 when it needs to be the net income. The net income with the dividends will give you the ending retained earnings. So this T account then, as we go back to, it's going to look just like this statement of retained earnings. It's going to look just like that in terms of what's in that account. Any questions? Are we ready for a quiz now?
I would say no. I know for a fact I'm not ready for a quiz. I'm seeing this. I'm seeing what you just.
Yeah, I
Neither
agree.
am I. I need to work on closing entries, honestly.
Yes, for sure. I need to work on that too.
And I just got home from class. I'm confused. Like it's a no for me. I'm not ready. It's not processing. So
Why do you think I asked you?
Well, thanks for asking. We're not
Okay,
ready.
so I'd already planned that I would wait. But I think, you know, we looked at this, and this is good. When you're doing something like this, you're learning, and it's no issue with that. The thing is when you make a mistake to learn from that mistake, but it helps a tremendous. If we didn't have this, then a whole bunch of people, I would still get 50,000 in this journal entry. Now I will have fewer because we had the mistake and people saw it. But in general, you know, half the students would put that in this journal entry. So it's good in the teaching process that we see what happened if we have the wrong amount in there. So this is actually good. It helps the teaching process in terms of, you know, as I go forward, even if I teach the other section, I will show what would happen if you do this. So it's good to see it both ways. So it's, you know, no issue with that.
So it's
Are
good,
there
like
any
we
other
made a mistake,
questions
right?
today?
I mean, like it's good we made a mistake, which gives you more room to explain, you know?
Yeah, that's it's, don't be, you know, you're learning something, and so
Yeah.
it's not a matter. If you're great and perfect the first time, then that's great. But you're learning something new and different, and therefore, you know, you go through it on it. Like I said, I make mistakes working with it also, even having to teaching it for many, many, many years.
So
It's
Professor,
not a
while
big
doing the
deal.
closing entry, like while doing these closing entries, do we have to create those T accounts or no?
Yes,
Okay.
in fact, they're already
that's
over here.
already on there. I just wasn't sure if it was supposed to be created for the closing entry on that page or not, like where the T account's supposed to go.
I'm glad you did because we could look at it better. But everybody else can come back here. Then you can lift them. They can be both places. You can lift them and put them over here as an instructional thing to see. So they go back over here, but the fact that they're both places is not a big issue. So I like the fact that you had them here because I could show it rather than flipping back and forth. I could go back between, you know, T accounts and closing entries. So, you know, this was a good learning session. Like I say, you learn. It's easy to gloss over something when, you know, everything is taught perfectly. and people don't see where they can have pitfalls. And so even though I try to lay them out, that can happen. But and that's why I have you all going and working and presenting as a team and studying. Everybody needs to try to get that book so they can kind of read it. Ms. Williams, is it clear now in terms of what that chart was showing?
I mean, it's clear now because you explained it, but the chart still is confusing because it say debit, retained earnings, credit, income summary. Like that's exactly what it say word for word. So since I'm a literal person, I took it literally, but I understand now that I should probably, use the net income versus the ending retained earnings.
Right. Yeah, I was giving you the accounts. Those are the accounts. So these are still the 4 entries, and it still says that. So yeah, you could read it literally, but I'm giving you the accounts, and I'm also creating a situation because we can have a loss. And then if this was a $60,000 loss, then these accounts have to be reversed. So that's what that chart is doing. So next class period, at the beginning of the period, I'll look at the submissions for the other groups. Okay. The other thing that you do need to do, which helps me, is to put the names of the people on this document as well as on the submission. So where you have group 4 submission, I need to know the names of the people. Because when I get ready to assign the points, it's going to be easier for me if I can see the names right there rather than going back to look for, at the group list. And some of the group lists have changed. So always submit with the names on that submission. So it should be, the person submitting and the other group members. Okay, that will help me. Okay, well, everyone, please have an enjoyable weekend.